Hello students, once again welcome back to Global Online. So in this session, we are going to discuss the 20 plus expected MCQs on business environment and international business. If you are preparing for the upcoming December attempt of NTA UGC NET, this session is for you, especially for the commerce and management students. Okay, so watch this video till the end and share maximum as you can. Okay. All right, so this is first question on your screen. Which of the following qualifies as a foreign direct investment? So four options we have, and one of them or two of them or three of them or maybe all of them are points which are covering or which are stating that this is the FDI. Okay. A foreign company acquiring 15% equity in an Indian company. B, purchase of Indian government bonds by foreign institutions. C, investment in Indian stock market through mutual funds. And D, establishing a new manufacturing plant in India by foreign firms. Options are like only A and D, only B and C, only ABC, or all of the above. So the right answer is option A, that is A and D only correct. Okay, when you have 15% equity in Indian company and establishing a new manufacturing plant in India by foreign firms, right? So these are the two types of FDIs that we have already seen in the theory session, right? See, FDI actually involves at least 10% equity should be there in Indian companies to call it as a FDI. That is important. Then option A qualifies as a FDI because the foreign firms acquire 15% equity. Correct. Minimum criteria is 10%, and it is the in the option we have seen this, it is 15%. Right. So obviously it is there. It is called as a FDI, right? Option D qualifies because establishing plant is direct investment, right? And B and C are passive investment. These are not FDI, but it is called FPI, right? But the question was asking the the options which are qualifying as a FDI. So only uh, A and D is qualifying as a FDI, correct? Because one is having 15% investment and second is actually establishing a manufacturing plant, correct? Next, which of the following statement is or are true about FPI and FDI as well? FDI is a long-term investment. FPI is a more volatile than FDI. FDI brings in managerial control. FPI involves active control of business. Okay. Options are AB, ABC, BCD, or all of the above. So right answer is option B, that is ABC. A, B, and C. Okay. FDI is a long-term investment, that is correct. FPI is more volatile than FDI, that is also correct. FDI brings in managerial control, correct. Okay. FPI involves active control of a business. No, that can be happen in FDI when you are establishing a manufacturing plant over there. Correct. See, FDI is intended for long term, right? Presence and often includes management control or participation. In contrast, FPI is a quick in and out. Okay, once you have invested for short term, you have what we can say withdraw all the money, that is done. That is called FDI. Okay, quick in and quick out, and hence more volatile. That is why it is called volatile, because it's not for a long term, it is for short term. Once you have investment for some time, you will withdraw your all money with the profit. Correct? That is happening in the FPI. FPI does not allow investor and any say in how the company is run. So D is incorrect. Okay. So basically, FPI is not like that thing where you have a business in another company, or sorry, another country, and you're having a manufacturing hub or anything. Okay, it's not like that. It is happening only in a long term period, that is from FDI. Okay, that the source is FDI, but FPI is just an investment where you can invest in another company in another country. Okay, that is only FPI. Next, which of the following are benefits of FDI for the host country? Right, employment generation, technology transfer, sudden capital outflow, improvement in foreign exchange reserves, and skill enhancement. Right, right answer is option A, A, B, D, E. Right? C is not there. C. FDI can help the host country by generating jobs, bringing new technology, strengthening foreign exchange reserves, right? These all points we have already discussed in the theory sessions. If you are new to this channel, please subscribe the channel and just go to the description box. You will find a link over there. Okay, click on that link and watch the previous videos as well, because it is very important that you should clear your concept. Okay, obviously through the MCQs we'll cover it, but the more and more points will be covered in the theory session only. So watch that video as well, so you will be covering the whole topic. Correct? Next, it also leads to training and skill enhancement for local workers. However, sudden capital outflow is more associated with FPI, not FDI. Correct? Next, which of the following sectors in India attract the highest FDI inflow as per recent trends? Right? Service sector, telecom, retail trading, computer software and hardware, and education. See, this question is most important. Make it most important. Okay, this question. So right answer of this question is option C. Only A and D. Right? Service sector, computer software and hardware. These are the sectors in India attracts the highest FDI inflow. Right? In recent years, India has received maximum FDI in service sectors like finance services, consultancy, and IT software industries as well. Right? While telecom, retail do attract FDI, they are not top contributors. Actually, where it is services, whether it is IT softwares, whether it is telecom, retail, okay, all are coming in India as through the FDI. But services and IT, like IT is also a service sector, right? These are the industries which are coming maximum in India, okay, as compared to telecom and retail as well. Correct. Education has FDI limits and receives less investment compared. So basically, education has its limits. That much of education facilities or services only available, okay, to come in India. Uh, Along with that, sorry, apart from that, okay, or exceeding that limit is not available or not allowed in India actually. Correct. Next, which of the following are routes through which FDI can be brought into India? Automatic route, government approval route, hybrid route, strategic route, or brownfield investment. Correct. Right answer is option B, that is ABE. Right, hybrid route, strategic route is not considered. India allows FDI via automatic route, no prior approval. Correct. And government route needs approval, that we have discussed, okay, in the theory session. Brownfield investment is a type of FDI, right, which is referring buying or expanding existing assets and in common in FDI mode. Correct. Brownfield, that means you are acquiring the existing company or existing business. That is your type of FDI, brownfield, right? We have already covered all the types like horizontal, then we have vertical, right? We have brownfield, right? We have then what is it? And some of the types of FDI we have already discussed in the theory session. Okay, all the FDI types we have discussed, right? Greenfield is also there. Okay, so go and watch that videos as well. Hybrid and strategic routes are not recognized official categories. Okay, next, which of the following statements differentiate FDI from FPI? This is very important. Okay, this is also we should make it as a important. FDI leads to capital information, FPI does not. FDI is illiquid, FPI is liquid. FDI is speculative, FPI is strategic. FDI includes physical assets creation, FPI does not. Okay, so the right answer is option A, B, D. Correct? See, FDI creates productive assets like factories or offices, improving capital infrastructure. Right? Here you can see, right? It is not easily liquidated, unlike FPI, which is highly tradable and hence more liquid. Correct? FPI is speculative, so C is incorrect. Speculative. Here it is saying FDI is speculative. No, FPI is speculative. Okay? Next. Which of the following may be negative impact of FDI on a host country? A. Repatriation of profits, monopoly or market domination, technology transfer, cultural erosion, or exploitation of natural resources. So the right answer is option A, B, D, E. Apart from C, all are correct, we can say. Okay, C is not correct, but all are correct. While FDI has many benefits, there are some challenges too. Okay, like profit repatriation, reducing forex, dominance of foreign firms, hurting domestic industries, and exploitation of culture or resources. Right? Sometimes FDI are coming in India or coming in the other country. Okay, FDI is possible in every country. Correct? So they may exploit the cultural or resources, the natural resources, or that if that country, a particular country where FDI is coming, in that country the natural resources are maximum, those can be exploited. Correct? In terms of raw material, understanding. So it is challenging too. Technology transfer is actually a benefit, not a negative. The question is asking about the negative impact. Okay, so these are negative impacts. Correct? Technology transfer, how it is negative? It should be positive, right? Next. Which of the following qualify as FPI? Now FPI. The same question was asked, the first question about FDI. Now it is asking about FPI. Foreign investor buying shares on Indian stock exchange. Foreign investor buying debentures of an Indian economy. Foreign entity acquiring 12% equity in an Indian firm. Foreign mutual fund investing in Indian bonds. Foreign company buying real estate for personal use in India. Okay, so right answer is option A, that means A, B, and D only. Okay, C is not correct, E is also not correct. Okay, FPI includes financial instruments like shares, debentures, bonds that don't provide management control, right? So here you can invest like in another country, you can share, you can invest in shares, you can invest in debentures, you can invest in bonds as well. This is called FPI investment. Okay, C, that means 12% qualifies as FDI because it exceeds the 10% threshold. Correct? Here in the question, the 12% was asked in the C option. That is why we selected as a incorrect answer for that. E is neither FDI not nor FPI. Real estate for personal use is not categorized under either. Correct. See the question. Foreign company buying real estate for personal use in India. Here, two things, one thing is important for personal use. It's not for business, it's not for investment, right? So it should not be considered as a FDI and FPI as well. Next, which of the following are features of FDI and not FPI, right? This is kind of a confusing question. Okay, if it is the features of FDI, why they have asked not FPI? Why they have written here, over here, that it is not FDI's features? Okay, they could have said like which of the following are features of FDI only. Okay, and then full stop, nothing else. But to confuse you, okay, this kind of question can be asked. Which of the following are features of FDI and not FPI? and they will give you some kind of options related to the FPI. But you need to understand the question first, right? So what we need to do in this question, we need to find out the features of FDI only, and we need to ignore the FPI. Correct. Bring in entrepreneurial skills, subject to sectoral caps in India, cannot be withdrawn easily, associated with long-term relationship, bring in volatile capital flows. The right answer is option A, B, C, D. A, B, C, and D. E is not correct. Okay. This is related to the FPI, not FDI. Okay. See, FDI is a long-term commitment. So in that reason, we bring it technologies and expertise as well, and skills as well. In subject to caps in certain sensitive sectors. Okay, it is a subject to caps in certain sensitive sectors. E is not correct. FPI brings the volatile flows, not the FDI. Correct? So this is all about this question. Next question. Which of the following regulatory bodies in India oversees FDI and FPI, okay, respectively? RBI, SEBI, Ministry of Finance, Department of Promotion of Industry and Internal Trade, DPIIT, or NITI Aayog. Okay, so right answer is option B, A and D for FDI, B for FPI. A and D for FDI, okay, and B, SEBI for FPI. Okay, okay. FDI is monitored by RBI, okay, under FEMA and DPIIT for policy and approval route. FPI, being a market-based financial investment, is regulated by SEBI. Niti Aayog is a think tank and does not regulate actually the investment, whether it is FPI, whether it is FDI. Okay. The question is asking about the balance of payment definition. That means the correct option which defining the balance of payment. A record of income and expenditure of the government. B, a systematic record of all transactions, all economic transactions between resident of country and the rest of the world. Right? C, a record of only trade in goods. And D, a statement of foreign exchange reserves. So when we talk about the balance of payment, it is not limited thing, limited to the one government, limited to the only trade in goods, or limited to a foreign exchange reserves. It is limited to the, it's not limited to the, okay, it is the transactions between the residents of a country and the rest of the world. Correct? So that is why option B is the exactly correct answer. A, C, and D, these are the limited transactions. See, BOP is comprehensive record of all economic transactions like goods, services, income, transfers, investments between residents of a country and the rest of the world in a given period. Correct? That is called your exact BOP. It includes current and capital account. We have already discussed the current account and capital account in the theory session, right? If you have not watched the theory session, go to the description box. I have provided the link of the lectures, previous lectures. Watch those videos as well. In terms of other options, ACD are too narrow or maybe unrelated, right? In the theory session as well, we have discussed how BOP is calculated. So the things which are necessary to calculate, okay, the factors which are included in the calculation of BOP, we have discussed. Clear? So current account, capital account, finance account, reserves, are all the things, how reserves are calculated, right? And what is the connection of a reserves with the BOP, that you will understand in the theory session. Next, which of the following are components of current account of a BOP, right? Merchandise, export and imports, services, which is unvisible, then unilateral transfers, remittances, and foreign direct investment, which is called FDI. Okay, we have already discussed FDI as well. So right answer is option ABC. Okay, see, FDI is a part of capital account, not the current account. Current account, that means uh, the transactions of goods, services, income, unilateral transfers, right? These are considered in the current account, not in capital account. Capital account में क्या करेंगे? FDI, right? Next, a country is said to have BOP surplus when imports exceed exports, total capital inflows exceed outflows, forex reserves decline, or there is a deficit in the current account. So, when total capital inflows exceed outflows, then we will call it as a surplus, BOP surplus. Understanding? When income, that means your inflow, okay, these both are more than outflow, okay, then we'll call it is a BOP surplus. Clear? और इसका उल्टा कर दो, when outflow is maximum, okay, when outflow is maximum or outflow is exceeding the inflow, that time we call it deficit. Okay, BOP deficit, right? BOP surplus means the country has more money flowing in than flowing out, usually through net capital inflows, right? A and D indicates deficit, not surplus, and C implies forex reserves are falling, all right? A sign of a stress, not surplus, not exactly defining the surplus. Okay, next. Which of the following transactions are included in the capital account of BOP? FDI, FPI, ECBs, foreign aid, imports of goods. Right answer is option B. That means A, B, C, not D. Okay. See, the capital account covers FDI, FPI, external borrowings, NRI deposits, and foreign aids. Okay, imports of goods are a part of current account, right? So only A, B, C are correct here. See, I think here current account में क्या include होता है? Goods, right? And this is the question which is asking about the exact the thing, imports of goods. No, it is not considered in the capital account. It is considered in the current account. Okay. Next, what does a persistent BOP deficit indicates about an economy? Strong foreign investment inflow, currency is under depreciation pressure, high export competitiveness, possible decline in forex reserves. Right answer is B and D. Okay, when currency is under depreciation pressure, one of the reason to indicate the deficit, okay, and possible decline in forex reserves, right? These are very important things to indicate the deficit. All right. A persistent BOP deficit suggests that the demand for foreign currency is higher, leading to depreciation of a domestic currency, possibly draining the forex reserves. Correct. A and C are incorrect. They would improve BOP, not worsen it. Correct. Like strong foreign investment inflow, obviously it will increase the BOP. Then we have high export competitiveness. Export competitiveness is more, then obviously inflow will increase, right? When inflow is increasing, how we call it deficit? It is a surplus. Correct. It leads to the surplus, not exactly we call it surplus. Which of the following statements are true about the relationship between BOP and exchange rate? Very important. Okay, very important question. A, BOP surplus leads to appreciation of a domestic currency. B, a BOP deficit may lead to devaluation or depreciation. C, exchange rate movements can affect trade balance. And D, BOP and exchange rates are unrelated. Options are there: A and B only, A, B, C, B and D only, or all of the above. So right answer is option A, B, C only. BOP and exchange rates are unrelated, right? These are related, it's not unrelated. Okay, see, BOP and exchange rates are closely connected. There is a big connection of these both. Okay, when exchange rates or currency appreciation depreciation is happening, it will directly affect to the BOP. A surplus strengthens a domestic currency while a deficit weakens it. Correct. Also, weaker currency makes export cheaper, improving trade balance. Right. And D is the false. See, these things we have discussed in the theory session. Right. How uh, the exports will be cheaper in a particular country. Okay, and why? What is the reason behind it? Getting it? How the factors of production will be also cheaper, and what is the exact effect of the of those lower labor or lower factors of production? Okay, that all things we have discussed. Correct. Next, which of the following are invisible items in the BOP? Software services exports, remittances from abroad, tourism income, machinery exports. Right is ABC. Okay. Invisible refers to non-physical flows like services. Right? Invisible means services and visible means the goods. Okay. A and C and B also. D, the machinery exports is a visible item. Obviously, it is a good, right? It is a kind of goods, and goods are visible, right? And the question is about invisible. Correct. That is why the machinery exports are not considered in that. Correct. Invisible form a major part of India's current account income, not the capital. In India, which institution compiles and publishes BOP data? Ministry of Finance, RBI, SEBI, NITI Aayog. Right answer is option B, RBI. Okay, RBI is the responsible body to publishing the BOP data. Reserve Bank of India, RBI, is the sole authority responsible for compiling and publishing India's BOP data on a quarterly and annual basis as well. Okay, Ministry of Finance, SEBI are involved in the policy and regulations but not in publishing. Next, which of the following entries would be recorded as a debit in BOP? Import of goods, foreign tourist spending in India, Indian company repaying foreign loans, Indian remittances to relative abroad. Right answer is option A. That means A, C, and D. Okay, debit entries represent outflows of foreign exchange, such as imports, loan repayment, remittances sent abroad. Okay, B is a credit entry because it brings the forex into it. It is an inflow. That is why. Okay, the BOP identity states that current account plus capital account is equal to 0. BOP always balances in accounting terms. Capital account surplus offsets current account deficit, or trade surplus leads to currency depreciation. Right answer is option B, B and C. Okay. See, BOP always balances in accounting identity. Okay. That is totally correct. Due to changes in the reserves or capital flows. A capital account surplus can offset a current account deficit. Okay, that is also this one, B and C. Is a misleading A option. Okay, option A is a misleading. They don't always sum to 0, and D is wrong. Okay, a trade surplus strengthens the currency. trade surplus leads to currency depreciation. This is not correct. Okay, it actually strengthens the currency. Clear? That is why the correct option was only B and C, not A and D. Clear? All right. So thank you so much everyone for attending this session. See you in the next session. Bye bye. Have a great day.